Now, before I get into the specifics of what you can expect while you're trading your accounts with my research service, I want to talk to you about something that I think is really important. A lot of people would say, well, Todd, if you're so good at trading, why do you teach it, right? Why don't you just trade and make millions and millions and millions of dollars and not put so much work into this business? And I think it's a valid question. It's something that I really want to talk about and just kind of manage your expectations. I'm the kind of guy who I want to run a good business that provides a good service to somebody, something that my kids will be proud of, my family will be proud of, and hopefully I can hand over to them. So let's think about this for 1 second. Hedge fund managers, okay? These guys will make 2% of whatever amount of money, AUM, assets under management that they have. So if you have $1 billion hedge fund and you make 2% a year, 2% as a percent of $1 billion is $20 million. Now, most hedge funds have a hard time even outperforming the S&P, okay? So let's just keep this in mind that I am not here to tell you that I can triple your account in 6 months. That is not the business I run. And if that's what you're looking for from me, I'm not your guy. You need to go somewhere else and try to find that good luck. It's not really going to happen. But I want to manage your expectations and just let you know that though I'm good at trading, my goal is to earn the amount of money that will overcome the expense that you pay me for my services, and hopefully more. So just keep that in mind. If I can put out a 15, 30, 40, 50% return annually, I'm going to be a multi-millionaire, and eventually that's where I want to go. So just keep that in mind. If I can earn, in terms of the trade alerts for you, a percent that will overcome your expenses, make you money, and you can learn my approach, the way I look at the markets, I think that's a really good deal for both of us. So just keep that in mind, okay? If everybody could if you're just going to fall for the marketing and say, oh, I can triple your account in 6 months every year, get out of here. Don't fall for that crap, because they're going to be billionaires, okay? There's hedge fund guys making $50, $100 million salaries who can barely beat the S&P. Do I feel like I have an edge over the market? Yes, I do. Okay, and at some point I will be managing money. We're starting here and we're going to continue to grow the business. So let's just talk about, I just wanted to get that out of the way before we go into actually handling money. So let's dive in. So the art of the trade, okay? Now, before I ran this business, I was a corporate, I was a Wall Street guy. I traded for a hedge fund. At one point, it was a $100 million hedge fund. I was the senior technical analyst for a brokerage firm on Wall Street. And then I met my wife, Trish, in Hoboken, New Jersey, while I was working back and forth in the city and living the crazy life. And I was like, all right, I knew we were going to have kids. I want to slow down. So I left. I left the corporate life, left Wall Street, and started this business. So I learned a lot on the hedge fund that I'm happy to share with you guys now. So the way I look at this is I call it the art of the trade, ART, account risk and trade management. And I have a pretty cool tool that you'll be able to download below that'll help you position size properly. That's the key to your success. Now, the conversation you and I just had about managing your expectations, are you here to triple your trading account? Okay, fine. Hopefully I go on a good streak and you're gonna have to size up. Or are you here for different purposes? Are you here to simply maybe smooth out the volatility of the returns in the S&P 500? You're gonna need to position size appropriately. The great thing that I've done, I think, about this business is you can take the trade alerts that I put out and position size whatever fits your risk profile and what you're here to accomplish. So in the presentation here, in the next 10 minutes, let's kind of discuss that and talk about and determine why you're here and how to get you to the goals that you have. So this is the position calculator that is available to you down below to download. So number one is account management. First of all, down here, I need to know, and you don't have to tell me, but you can put this in the spreadsheet. What's your account value right now? You're going to type that in. And don't worry, we're going to go through an actual trade. I'll show you how to use this position calculator. So number one, put in your account value for A. Number two, you've got to determine your risk profile. And you're going to need to fill in these percentages that, again, I'll help you determine. Third part is T, trade parameters. So ART, account risk trade. That's how it all comes together to effectively position size and handle risk as a professional trader. This is everything. It's not the indicators, it's not the methodologies, it's not Elliott, it's not Fib. It's all about how you handle that capital. And that's what's really going to keep you in this game for the long run. Okay, so number one in the account A, enter your account size. Pretty simple. Okay. Number two, risk profile. As I mentioned, we're going to take you through that. So let's go into risk profile. So we utilize rankings to convey our conviction in the trades. So there's 4 tiers. Tier number 4 is your average everyday trade size that we're used to probe the markets with minimal exposure. I would say 50 to 60% of the trades that I send out are tier 4s, just average everyday trades, not getting crazy. Tier 3, slightly above average, moderately aggressive, and is used for trades that are slightly better than your average everyday trade. I would say on average about 25% of my trades are tier 3s. Tier 2s, and this is where things really start heating up when you have a lot of conviction in the market. It's a high conviction trade that seeks to aggressively position within ideal trading conditions for maximum gain. Okay, tier number 1, this is where literally the stars align and you're going for the throw. Now, let me just take a second here and go off script. This is going to matter so much. Position sizing, varying your position size is going to make all the difference. You need to know yourself, and if you're relying on me, you need to kind of monitor me as well, and I'll try to tell you how I'm doing. I'm honest on my daily videos. Am I trading well? Is the market trading well? Is the market trading well and I'm off? Is the market trading well and I'm on? You know, that's something you have to constantly monitor as a trader, and that's going to make all the difference because you're going to vary your position size depending if the market's trading well and offering good profit potential and you're in sync with the market. When that's the case, you got to size up. When things aren't going well or the market's choppy, you're just not really trading well, it's kind of discombobulated, you need to step back and protect capital. Guys, I'll trade anywhere from 2 lots, 2 option contracts to 50 or 100. Okay, I mean, I have a capital account that I can trade very large size, but you need to figure out how small you can trade versus how large you can trade. And you need to really vary that. I think it's a mistake to always say I'm a 5-lot trader and that's it. You got to vary depending on this. And these tier rankings are going to help you determine, they're going to give you kind of a mathematical approach to help you figure out how large to trade. So before we figure that, we got to figure out what are your goals in trading. Have you defined your trading style? I think there's 3 kinds of traders that kind of come to me. The highly aggressive guys wants to double or triple his capital. He doesn't care the risk he has to take. Drawdowns don't faze him. He's targeting significant capital accumulation. Portfolio speculator, which I think is probably majority of the customers that come and see me are looking for less volatile capital appreciation, but has a greater appetite for risk than the average investor, kind of called active investing. Okay, this guy's trying to target like a 30%, 40%, 50% return per year, which is pretty aggressive, and you're gonna have to take some risks. The guy back here, as I said, is looking for 200, 300, 400% return. The guy down here, the investor, just looking to beat the S&P and minimize the drawdowns. Okay, if we could hit a 5, 8, 10% return per year, perfect. Okay, better than the buy and hold. So a model risk profile that I think with an aggressive trader, there's 4 tiers as I mentioned. Tier number 1, and you can vary these aren't set, but a tier 1 could risk 8 to 10% or even 15% of his capital. That to me would keep me up at night. Like no way would I risk that amount of money. This is not me. A tier 4 average every day maybe 5%. Okay, so 5, 6, 7, 8% risk, something like that. A portfolio speculator, somebody who's still pretty aggressive. An average everyday tier 4 might be doing 2%, 3%, 4%, or 5% on the tier 1s when things are really coming together. An investor, this is more like me. I'll do 0.5%, 1%, 1.5%, or 2%. And guys, you can vary these, right? If you, let's say you want to take a tier 4 and a tier 3, do like a 1%, 1.5%, and then tier 2, let's say you want to get up to like 3 or 4%, and then the tier 1, which is very infrequent, happens maybe do a 5 or 8% risk. You can mix and match those depending on what you want to do. But the most important thing is you've got to commit to these numbers and let me know what you want to do. Okay, so now we're going to take all this information and plug it into the calculator. All right. Okay, so this is an actual trade alert that I sent out to customers. And we did this on the last video. So this is going to be a new trade alert, TSLA, tier 4, full size. Okay, and I have a little misspelling there. That's all right. So the actual order from Thinkorswim I copied is going to be buy 5 vertical, TSLA, and the 5 Mays, which I'll explain that. 17, that's the year. This means 5 May means they expire on May 5th. We're going to buy the 325 call at $1.58. Limit call debit spread. And in the parentheses, they say the weekly options expire in 7 days. Buy the 320 call, sell the 325 calls for $1.65 or less. Okay, so let's take that information and plug it into the position calculator. All right, so first thing is you want to go up here. Actually, you know what? Let's go over here first. So I just threw some random numbers in there for account. So A, right? So that's your account size. You got to type in your actual dollar value right now. Okay, actually, I prefer you put your net liquidation, not how much margin you have left or anything like that. Put how much your entire account is worth right there. Then you got to determine your tier profile, right? So for me, this is pretty average for me. 5% is my tier 1, 3% is my tier 2, 2% right there for tier 3, and 1% right there. This particular trade, we're going to hit the drop down. This is going to be a tier 4. This trade is a call debit spread. You hit this drawdown right here, and I've only have it programmed for call credit spread, put credit spread, call debit spread, and put debit spread, and we'll explain what those means if you don't know in a different video. But this is a call debit spread. And as I said, we're doing full size. So we're doing Tesla full position size. Okay, so we're going to go all right here at 1. Okay, we're going to put in the long strike. So we're going to buy the 320 calls. So you type in 320. The shorts are going to be the 325s. So we're going to type in 325. Okay, credit received. We said $1.65 or less. Okay, so I put the order in $1.58. Tesla can be pretty wild, so it went up to $1.65. I'll split the difference. I don't remember where I got filled. So we're going to put a debit paid. Now, you got to put in the debit paid. If it's a call debit spread or a put debit spread, put in the debit paid. This is your entry. If you're doing a credit spread, put in the credit right here. Okay, this is a debit, so we're going to type it in. So what did I say? $1.62, 1.62. Okay, perfect. So $1.62 gives us a potential reward of $3.38. $1.62 is our total risk on the trade. Now here's how I like the position size. I want you to position size based on the expectation of max loss. Let's say everything goes to hell in this trade and we're going to lose a full $1.62. We need to position size for that. Okay, so if we're doing a tier 4 with a $25,123 account and our tier 4 is going to risk 1%, which is $250, the most we can do is 2 contracts. The most we can do is 2 contracts right there. If we're doing a half size, if I say, for example, do 1/2 position size, there's your half size right there. Okay, if I was to go up to a tier 3, notice you can now do 3 contracts. Okay, so go through this process every single time and you'll start to see how you need to appropriately position size. And I think you'll find that most of you are trading too large for the count you have. So as you can see, position sizing and appropriate handling of your trading capital makes all the difference. It's so important, as I said, a very position size. Understand how large or how small you need to be trading based on the trade alerts that I give you, depending on your goals in trading. Now, one thing that I do want to mention, I made the aggressive risk profile sound bad. Keep in mind one thing though, a lot of people will take like their overall portfolio, let's say they have $1 million portfolio, whatever, and they want to allocate 10% of that, $100,000, towards something more aggressive like this. They can take a very aggressive risk profile, right, and do like a 2, 4, 6, 8% tier profile, because they're going to apply that aggressive risk profiling to the $100,000, which represents 10% of their overall portfolio. So there could be examples like that where, you know, in the grand scheme of things, your 2%, 4%, 6%, 8% risk compared to your $1 million portfolio is really not that aggressive when your base denominator is 100 grand. So just keep that in mind. So you've got to determine what you're here to do. You got to know what your goals are. Okay, you got to know what the path is and your goals are, or else, you know, how do you know where you're going? Okay, how do you know you've arrived? So please do that. Take that time, write those numbers down, commit to them, and you really shouldn't change them that often unless you make a conscious decision to say, I'm changing my risk profile. All right, guys, good luck. Remember, art of the trade.